If you can hear me, just let me know on the comment section. Just let me know in the comment section. Okay. So I want to know, like, how many persons here have watched that video, the videos I posted on YouTube? If you have watched the video, let me know, so I know what I'll be discussing with us tonight.
Okay, good evening. I've watched the videos, like
Okay.
three of them.
Okay. Are you having any challenge on the video? Any of them?
No, 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 I'm not. I'm not. They are clear for automation.
Okay. Thank you. Any other reaction? Okay, like I said, trading is more of a practical something. It's not something we will just come and start giving theories and theories and theories. No, it's more of practical. Okay, so for you to follow, you need to watch those videos. Okay, but I'm going to do a brief introduction about trading and what Forex is all about. Okay, let me start by saying that trading is just buying and selling. When you buy, you sell. That is what trading is. And trading has been in existence for a very long time. For a very, very long time. A lot of people in Japan then, they used to trade rice. Even now, you can trade rice, you can trade soya bean, all right? You can trade commodities and other things. So trading is just buying and selling, all right? You buy, just like buying something and you predict that this thing is going to go high. When it goes high, you sell it. Just like in Nigeria now, if you bought a car, let's say Corolla, around 2020, maybe it's less than 2 million. Now that Corolla, you're selling that Corolla now, you'll be selling it like 9 million. So that's just what trading is all about. So there are a lot of things people trade. Okay, there's a lot of things you can trade. You need to watch those videos because what I'm going to recap here, if you check on those videos, you see them. So if you want to trade, there are a lot of things you can trade. You can trade stocks. All right. When we say stocks, Tesla, Apple, Meta. So these are stocks you can trade. You can trade funds. All right. You can trade futures. If you can see my screen, let me know. You can trade futures. You can trade Forex. You can trade crypto. You can trade indices, bonds, economy, options. So there are a lot of things to trade. Okay. But my class with us here is limited to Forex. Okay, our class here is limited to Forex. So what is Forex? Forex is just foreign exchange. Forex is foreign exchange. It's good we understand what we are doing. Okay. For instance, I'm in Nigeria. Now I want to travel to Ghana. In Ghana, for me to make transaction, for me to buy things in Ghana, I will need Ghana cedis. So the naira I have with me that I travel to Ghana with, I will sell my naira to buy their Ghana cedis. For me, if I've done this, I've done forex trading. Okay, so please, if you can see my screen, let me know. Okro, you can't see my screen. Can any other person see my screen? But can you hear me? Please react. So, okay. Okay, so our class or our study together is limited to currency pairs, forex. All right. We are not interested in stocks. We are not interested in funds. We are not interested in futures. We are not interested in crypto. We are not interested in indices. We are only interested in foreign exchange. We are only interested in forex. All right. So forex, for you to say that forex have occurred, it must have to do with two currencies. Two currencies will come together and form a currency pair. All right. For you to say that forex have occurred, two different currencies must come together and form a currency pair. Okay. So I want to list the popular pairs that we have. We have euro. That's for European Union now. We have euro. We have United States dollar. We have Great Britain pounds. All right. We have Australian dollar. We have New Zealand dollar. We have Swiss francs. We have Canadian dollar. Uh, which other one? This seven. I think it should be eight. One more, please. If you know it, remind me. But okay, JPY. All right, JPY is Japanese yen. Let me mention it again. These are the major pairs. These are the major currencies. All right, when they pair together, they form major pairs. So these are the major currencies people trade. Number one, euro. Number two, Great Britain pounds. Number three, United States dollar. Number four, Australian dollar. Number five, New Zealand dollar. Number six, Swiss francs. Number seven, Canadian dollar. Number eight, Japanese yen. Okay, so these are the currency pairs people trade most often. Why do you ask me, why do people trade these currencies most of? Why do people pair these currencies and trade them most often? That's what you ask me. Okay. The reason is that a lot of people trade it. Their economy is stable, a kind of stable. So a lot of people trade it. There's a lot of volume, okay, in them. This is Euro JPY. It's represented at EUR, then JPY. JPY is Japanese yen. All right. GBP. This is GBP USD. This is CAD. Canadian dollar Swiss francs. This Swiss franc is represented as CHF. Okay. Swiss francs. So how they represent this thing is the first two letters you see here is the currency, the country's name, Canada. Then the third one is usually their currency. The first two letters, the country's name, the last one is the currency. For this one, this Swiss francs, I think their former name starts with CH. Then the F is their francs. USD, this one is popular now. United States dollar, Japanese yen. Then NZD, New Zealand dollar, okay, Japanese yen. Then JPY, Japanese yen, Australian dollar, AUD, USD, okay. Please, what I'm doing here is simple. You can do it. Just go to your Google Chrome or you go to Apple Store or Play Store. on your phone, download Trading View. It's free of charge. The software I'm using is called Trading View. It's free of charge. Just go there, download it, and use it. Okay. Trading View. You can just go to Chrome, search it, you see it, you see all these pairs, anything you want here, you see it. Okay, so any reaction so far? Any question? Please let me know so we'll move on. You got the spelling, Trading View. You got the spelling. If you can't see my screen, it's from your own end though. Trading View, that's the spelling. You can just go, if you have your laptop, go to Chrome, search it, it will come out. You just register your email. As you register your email, you can still have it on your phone. Just put the same email, you have access to Trading View. It's a software used for technical analysis. Okay, that reminds me, there are a lot of traders. We have traders that trade based on news. We call them fundamental traders. We have traders that trade based on analysis, based on data. All right, they go and check past data, what happened in the past, then use it to trade. We call those one technical analysis. All right, so for you to be a technical analyst, you must use one or two softwares. All right, but the most popular software is this Trading View. So use this Trading View to navigate the forex market. You use it to know what is happening in the forex markets, like what has happened. Then if you see same patterns that happen over a period of time, when they start repeating, you now make a prediction that the price is going to go here or there. So that's what Trading View is all about. Okay, so another thing, another type of traders we have when we come to technical analysts, we have scalpers. All right, scalpers are those that uh, trade in a lower time frame. Lower time frame, I mean from, let's say, 5 minutes down. Below 5 minutes, we call them scalper. So as a scalper, if you want to scalp, you just change the time to 1 minute or 5 minutes. Okay. This candlestick you see here represents each time. I mean the 15 minutes time frame. So each candlestick represents 15 minutes. Each candlestick represents 15 minutes. Okay. So another type of traders we have based on the time frame they use, we have the people we call day traders. These are people, when they take a trade, they will expect it to last a period of 24 hours, all right, or less than 24 hours. So they normally use the 15 minutes time frame or the 1 hour time frame, all right. Another type of traders we have are the swing traders. These are people that put trade and allow it to play out like 3 to 5, even 1 week, all right. For you to be a swing trader, you must focus on candlesticks that are 4 hours. All right, so you go to 4 hours, 1 hour. No, I think from 4 hours, one daily candlestick, this 1 hour, then the daily. Then we have another type of traders that we call them the position traders. All right, these people, they can leave trade for 1 month, 3 months, up to 6 months, or even 1 year. Okay, most of them, they use weekly time frame to do their trade. I'm just trying to make a recap because all these things are on that video on YouTube. I'll still post this one. So what the main reason I'm doing this class is for interaction. All right, because everything I'm saying here, I've already recorded it and posted it on YouTube on the link I sent. So you just take your time and watch. I'll still upload this one. So I need us to interact. Let me know. So far, what I've said so far, I've talked about trading, I've talked about Forex, I've talked about a little bit about trading view. So far, I want to know. Okay, the fourth one, the first one is scalpers. I'm a scalper. That's why if you see the analysis I do on the group, we use 15 minutes for confirmation. Then we use 15 minutes for breaks. Then we use 1 minute to trade. All right, that's uh, scalpers. The second one is day traders. These are people that use, maybe they use let's say from 15 minutes to 1 hour and trade. They want their trade to either hit SL. SL is stop loss within a day, or hit TP within a period of 24 hours or less. Then we have swing traders. Swing traders are people that they use maybe daily trade or 4 hours trade to place a trade, and they expect to see results in 4 days, 3 days, or even 1 week. All right. Then we have the position traders. Position traders. These people, they put trade, maybe they put today, and the next time they check it is 3 months, 1 month, or even 1 year. Okay, so why do we have this type of traders? We have this type of traders to fit what you do, because a lot of people have a lot of things they are doing. Not everybody is going to be on the screen, be a day trader or be a scalper. Okay, so those that maybe you have another job you are doing, you can come and take one day, do analysis, put your trade, leave it. You won't check it again or to after 1 month, after 3 months. Okay, and you still make your money. So no matter your career path, what you are doing, you can still be a trader, but you must not always be on the screen trading every day. Okay, you can do your analysis, do position trading. Okay, that's about that. So what you need to start up trading, what do I need? I need to learn trading. What do I need? It's simple. What you need is, once you have a phone or a laptop, okay, and internet, the next thing you need is this trading view I talked about. All right, you download it or use your Chrome to access it, register your email. Another thing you need is what we call Forex Factory. I'm sharing it now. Forex Factory, that's the next thing you need. It's just forexfactory.com. Forexfactory.com. Here they show you the news, what is going to happen. I'm sharing the screen now. Okay, if you can see it, let me know in the comment section. So forexfactory.com, simple, you just click it, it opens. You're not paying anybody. All right, if you, as you can see, this is the news for today. This is Monday. All right, it tells you the news. Most times high impact news affects the trade. Okay, so there are many colors you're seeing here, the impacts. You see, this one is holidays. During holidays, no impact. Okay, market is usually low for this currency, JPY. Then the yellow is low impact. When you see yellow, you know that it's low impact news. All right, when you see red, you just know that it's high impact news. For this Swiss franc, there's red, high impact news. For this GBP, holiday, bank holiday, euro, low impact, euro, USD at 2, low impact. This USD at 3 p.m., it was high impact, right? There's another color, orange. When you see that, you know it's medium impact. So you need this. This is what you should check every morning when you wake up before you enter a trade. Because if you don't know how to like check the news will always manipulate the market, especially for those of us trading in lower time frames. Okay, so it's good you know the news. That's number two things, the number two thing you need. Then the number three thing you need is called position size calculator. I don't know how long this video has gone. I don't want to make a long video. Let me check. This is position size calculator. You saw the ash. Now the ash is holiday. Okay, the red is high impact, the orange is medium impact, then the yellow is a low impact. All right, that's for forest factory. Okay, then the next place I am now, this position size calculator. What you need, this position size calculator, if you go now on Chrome and type it, position size calculator, to come out, you see the one for my FX book. Click there, it will open, it's free of charge. What do you do? Okay, this position size calculator, that's how you calculate the amount of risks you are willing to take. This is very important. Please pay attention. This is the mistake a lot of people are making. The amount of risks you are willing to make per trade. This is where you do it. For instance, I want to trade GBP USD. Okay. Great Britain pounds against United States dollar. That's what I want to trade. Now, my account is on USD. Okay, my account is on USD. Then my account size, the total amount I have in my account is $1,000. Okay, now I want to risk. Please, if you are my student, if you're following me, risk 0.5% of your account. 0.5% of your account. You put it here. 0.5. This one, $1,000. Okay. Now the pips, lot size pips. This is the amount you are willing to risk. Let me show you something. I'm showing the trade view now. Let's say this particular trade now, I want to take this trade. The market is currently here. Look to the right, you see 162.645. That's where the market is now. Now, I want to predict that from here, this market will go up to this place. Let me use the angle. Okay, I want to predict now that from here, the market will go to this place, up here. This is my target. This is my TP. Take profit from here to this place. All right, from 162.675 to 163.146. That's my target. Now the market is here. I place the market here. Okay. Then from here down, from this my entry to this down, all right, is 1.162.403. All right. This place now is my stop loss. If this thing doesn't go up to here and then goes down, if it from here goes down to this place, here is my stop loss. I'm willing to risk this place. All right. If it gets to this, I'm willing to lose this place. So if I now go to position size calculator, what do I do? Let's say, assuming from here to here is just, as you can see, it's 25 pips. Is written here, 25.4. That's where you see the pips. All right. Now, what do I do? Please remember what I'm saying. SL, 25 pips, stop loss. I want, if the market goes this direction down, the market should take me out. Let me take a loss of 25 pips. Okay. All these things, pips, I explained all these things on that video. Okay. Now, if it goes up from here, which is the entry, to this place, the market should take me out and I win 74.5 pips. Okay, that's my take profit. This is my take profits. Here is my stop loss. Okay. Now, this is how many? 25 pips, right? So 25.4 pips. I'll now go to my position size calculator. If I go to my position size calculator, remember the amount I have is what? $1,000. I'm risking 0.5 of my account. Now the stop loss pips is 25, 24.5, 24.5, right? I just want to put one trade, number of trade size, just one trade. We put it one, then calculate. It's now showing me that the money I'm risking is $5 and the loss size I will use is 0.02. That's the loss size I'll use. Then put my stop loss here on the trade view. Then I put a trade. Once the trade goes in my favor, I win. But if it goes against me, I lose just $5. So this is what position size calculator does for you. Please, any question? Yes, position size calculator. Yes, position size calculator. Just go and look it up on Chrome. You see it. Look for the one that comes out with my FX book. Okay. So please, any reaction? I believe there should be reaction in this position size calculator. Any reaction, please? Mary Chuku, are you with us? Christian,
Yeah, yes, boss. Good evening. Oh.
yeah.
Yeah, mm, it's very clear. It's very, very clear. Even in the previous video, I watched it. It's very, very clear. You
Mm,
know, my trade today, Sha, I think my own is my lot size. I went for a very high lot size. Like
mm.
I didn't manage the risk very well.
Yes.
So
So for you
it's
to the way you get your loss size is depending on your account.
yeah.
Okay. Your account, that's what the depends the loss size you'll be using. Yeah, if you
Mm,
have a small account, you use a small loss size. If you have a big account, you use a high loss size. That's just it. So this position size calculator helps you to do the calculation instead of you to start calculating it, doing it manually. You just input all the. Okay, are you with me? If you're going
yes,
to
yes.
trade, yes, I don't expect anyone to spend more than $100 funding an account in less than 3 months. If you're funding $100, or let's say you're funding 40, be disciplined. Let it be that $100 should stay with you at least 3 months. Not if you lose $100 now, you go and fund it. No, 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 no. It's not about making the money, it's learning the process. Okay. So don't get stick to always funding account. You understand? Just try and learn. You can use demo, even if you fund, try and hold that account for at least 3 months before you blow that account. Do you get? I don't expect anyone to fund up to $100 in less than 3 months. That is a rule everybody must follow. Okay. If you, let's say you want to fund 1,000, yes, you can fund 1,000, but that 1,000 you're funding, it should not be uh, more than $1,000 in 3 months. Just give yourself 3 months. Okay. If you can make 5% of your account in 3 months, you are doing well as a trader. Okay. If you can keep your account and not blow it in 3 months, you are doing well as a trader. So this is one thing you need to know. This is what I didn't know when I started up. Okay. So I need to share this knowledge because the market doesn't care about you. You can keep depositing 100 million, 1 million, you keep losing it. Okay. So it's better you take your time, reach 0.5, if possible, one trade a day, 0.5, $5, you do it. You try to earn three times what you did, like times three. If you do 0.5, you'll be earning 1.5. Okay. You do it like that. If you do 0.5 with 1,000, which is $5, if he enters, you get $15, right? That's how you just do it. Don't be motivated by the money. Be motivated by the percentage. Okay, because if you start with 0.5% of 1,000, you grow to 0.5% of 10K. You grow to 0.5% of 100K. You grow to 0.5% of uh, 1 million. So it's just gradual. Okay, no rush, no pressure, gradual. So that's all I have to say. Any reaction, please, for those that have not watched those videos, please watch it. I'm still going to upload this one. If you still watch this one, you still hear one or two things you didn't grab during the class, and those that didn't see the, like, that can't see the screen, you see it on the video. Any reaction? Any reaction? So we'll be done for today. I don't like spending more than 40 minutes in videos.
Okay, yeah, thank you. Like I believe that is a process. Everything, whether it's winning or losing, is a process. Like we are just
Yeah.
learning. Yeah, so I will stop trying to do it manually because I believe my last trade, I didn't really calculate anything. I just saw
Mm,
it and I on my own, I fixed my SL and my TP. So and
yeah.
I didn't even look at the charts. So and
Yeah.
from there it took me out. So I am learning actually. I will try to do it the right way and not on my own.
Yeah. Please just take trading as a business. If
Yeah.
you want to trade, you bring out book, bring out your laptop or phone. All right. You plan what you want to do. You don't just make random decisions. No, plan what you want to do. The problem of trading, like I always say, is strategy is the easiest thing in trading. Strategy is the easiest. The most difficult thing is to be disciplined and follow your rules. That's the most difficult thing in trading. If you can do that, 3 months, 6 months, you start seeing drastic results. Okay, you start seeing results. So that's all. That's all for tonight. So any other reaction from any other person? So we'll call it a night.
No reaction. I believe you said it
All
all.
right, all right, all right,
Mhm.
all right. All right, good night, all. Good night. We'll see you on Wednesday. I have another thing to discuss on Wednesday. So try and join. It doesn't take time. 40 minutes, we are done. Okay. All right, good night.